Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it deja vu because there's a couple things here that this market looks like it's repeating something that it did earlier in the year. And I'm going to talk about two different things that I'm seeing. But first of all, we're going to start off here with the side-by-side view of the Dow Industrials, the S&P 500, and the Nasdaq weekly charts. We're going to take a quick look at my ETF dashboard just in the sectors, the 16 sectors. We'll look at then the S&P, kind of an update kind of view, then look at the Nasdaq Composite, the Nasdaq 100 ETF, the Qs, take a look at the SOX index, and then gold and silver. All right, so here's the side-by-side view. So last week I talked about, this little harami pattern here on the Dow Industrials weekly. And this was a Japanese candlestick setup that the reason I titled the video Out of Breath is because that's what the Japanese kind of refer to this setup as. But in order to get this confirmed, you got to break down and take out the low of that week. We didn't even come close. We took out the high, and it clearly did not turn into a reversal pattern. So, just like any setup that you talk about in anything, you need follow through for it to confirm what it is that you're looking at. But the Dow was up big this last week, up 1339, the S&P 500 up 229, the Nasdaq Composite up 844. And when you look at the daily ranges in here, clearly the Dow had the biggest, the S&P 500 in terms of the candle, the move was second, and then I guess it looks almost like a tie with the Nasdaq Composite. So let's take a look at the dashboard that I was talking about. Here's the 16 sectors. Every one of these were positive, 16 up and 0 down. A little bit of a reversal here. And look at the semiconductors. That's why I wanted to look at the SOX. I think I saw a statistic that somebody put out that said this was the best week, I think, or day. I think it was the week since 2001 on the semis. I mean, it was one heck of a rally, but you got to be careful. These things, bear market rallies can be very, very vicious and very strong, very quick. And that just looks and feels like exactly what we just got, and we may be on the tail end of it. But when you look at for the year, and we still got energy, the leader, and now communications, XLC Communication Services has overcome the semiconductors. The semis were leading to the downside for most of the year, but now XLC's got the lead. We still got quite a few of these sectors that are very, very negative. Let's see, 1, 2, 3, 4, 5, 6, 7, 8 that are 20% or greater, 8 out of 16 that are greater than 20% to the downside. So that is the picture. But look at this little figure right here, 16 up and 0 down. I want to talk about that. All right, so here's where we're going to go. We're going to go back and we'll take a look at the SPX. So here's some signals that I look at in here. Now, see this arrow right here? And it says, let me get rid of the crosshairs for a minute. It says 16 up and 0 down. I look back. Unfortunately, I don't have my dashboard data from back over here in March. I would love to have had March, February, etc., but I do have it since May. And here's when we had a 16 up, 0 down. 16 up, 0 down right here, August 12th. The week ending August 12th, Friday, August 12th. The week ending Friday, May 27th. The week ending September 10th. Or maybe it was 9th. Yeah, September 9th. Friday, September 9th. We got one just a few weeks ago here on October 21st, and then I got a couple of signals. And this really flipped us. I'll tell you, I really thought we were breaking down in here. I thought we had our zigzag, thought it was deep enough. And what this has morphed into, well, I'll talk about it in a minute, is a double zigzag. That is the risk we run when we're in corrective patterns. Corrective patterns can always become more complex. But here we are with another 16 up and 0 down sector where basically whitewashed to the upside, okay? So It could be that we're at the extreme, we're at the end of it. I find it kind of interesting. And then the other thing I call this video Deja Vu for a couple of reasons. Well, one of them is this right here, okay? I put out a video on September 10th, Saturday, September 10th, or the weekend, that weekend, I don't remember the exact date. And it was called Whiplash. And this is exactly what we were getting. 16 up and 0 down right here for the week ending on September 9th. And then now we're getting it again. It just feels like, based on what just happened with Thursday and Friday, that we're getting whiplash part 2. Now, this move that happened on Thursday, I mean, yeah, it was a big, strong move, but it was interesting that the up volume was 91% of the total volume up and down. Well, the day before, it was 91% down volume as a percent of the total up and down volume. Literally just the opposite. I mean, we literally just flipped. But here, it was just as negative when you look at volume-wise. So it's going to be interesting to see how much more do we push in here. The other thing I want to talk about is just an update on the Elliott wave in here. Here's what I've got on the S&P. But here's what I noticed about minor wave 2. I believe we're in minor wave 2 of intermediate wave 3. Well, minor wave 2 so far is 509.9 points from intraday extreme high to intraday extreme low. We've also retraced almost exactly 61.8%, very close to it at the high. If you go back to minor 2 of intermediate wave 1, back over here when? The end of March, 522.65 points from the low to the high. We're pretty doggone close, 510 to 522. And yeah, we got a little bit deeper. We got just slightly above 61.8% here. Didn't get to the 78.6 next Fibonacci measure that I look at. But, you know, big, deep retracement. We're getting a pretty deep retracement here. Could we push a little bit more? Maybe. We'll see. But it's interesting how some things are lining up, okay? So that's what I wanted to talk about there with the S&P. Let's take a look at the Nasdaq Composite. So that was the second thing I saw, okay? So this similarity that I'm seeing with the wave 2s of intermediate wave 1 and intermediate wave 3, okay? And then the fact that we had the, 16 sectors up and zero down back here in September, just like what we're getting right now. Okay, so going to be real interesting. Oh, by the way, this signal here, short-term breadth thrust to the downside, we were on the verge of getting another one. We were one day away, and then Thursday ruined it. So, man, I saw that thrust developing, and we had the signal from the trend. We had this 61% signal here. This was a 10-day moving average extreme on the breadth. And so I thought, man, we had some things lining up. It just didn't quite materialize as we morphed into a little more complex corrective pattern. Okay, let's take a look at the Nasdaq Composite. Okay, here's the Elliott wave picture on the Nasdaq Composite. I've got us in intermediate wave 3 to the downside, 1 and 2, and I'll admit, wave 2 on both the composite and the Qs is definitely much shallower than what we've seen even on the S&P and on the Dow for sure. The Dow's a little bit different animal. But look, we've just only gotten slightly above 38.2%. We may push higher. We may approach that 50%. Here's a dashed line. Let me zoom in a little bit. What I've done is I've put a dashed line at this high right here, which is 11,613.57. And 50% retracement is 11,635 if you round it. Okay, so if we continue to push higher, that would be my next target for potential resistance in here. Okay, and given the other factors that are going on in terms of some of the technical indicators, we are extremely overbought, by the way. On the McClellan oscillator, we are severely overbought. Um, let's see, the next thing, let's just pull up the Qs. That's what I wanted to look at. It's a very similar picture in here. And the resistance level is up here at 294. And that's, look at 294 is where that high is too. So that's kind of interesting. It almost perfectly lines up with 50% if this continues to push higher in here for wave two. So that is the picture that we've got in terms of the Elliott wave picture on the Nasdaq. Let's take a look at the semiconductor index, the SOX. Okay, here's the Philadelphia Semiconductor Index, and I've got it as wave two. Yeah, it was up strong this last week. Look at this Thursday, Friday rally. I mean, the tech stocks, everything just exploded to the upside with the short covering that occurred. I mean, not really surprising given that kind of move in a bear market, really. And yes, we're in a bear market. You can't call it anything else. And so right now we've had quite a bit of a retracement. We're into that 61.8 to 78.6 zone up in here. Pretty deep move back for wave two. Yeah, but again, from an Elliott wave perspective, a wave two retracement is valid as long as it doesn't retrace 100% over greater than 100% of wave one. So it can get, even deeper if it wants to, but we're pretty extended. The RSI is sitting at over 70 here, for only the third time this year. So it got extended right here in the middle in the big rally from July into August. And then as it approached the highs in August, it got a little more extended again. Okay, so that's where the semis are sitting. Let's take a look at gold and silver. And I'm trying to keep my voice together here on Sunday morning. So here's gold and silver. GLD was up $1.08 on Friday, up $8.09 for the week. Huge move, huge 2 weeks in a row, big moves. So here's what I'm still sticking with the bearish scenario here on a weekly view, the bearish scenario for gold. I still think we're potentially working our way down in a C wave right here of a very, large flat scenario. But I'll tell you, here's what, and I'm talking about flat from a very long term, A, B, C, okay? Back over here, wave A bottomed at the end of 2015. And then we had a big three-wave move up for B. Now, there is the possibility, and for the longest time, we thought there was going to be a bull scenario, but it just never panned out. It just stalled out. It had this big sideways, and then we broke down out of this range. But I got to say, what am I looking at? If we take out this high right here, the August 7th, the week of August 7th high, which is 167. So let's just say 168 on GLD. Then I've got to start thinking something else is most likely going on, and maybe we're resuming the bull move to the upside. And there's another scenario that says this is a part of an impulsive wave structure. This is like a large wave four corrective pattern. That's possible, but I'm not going there till this starts to move to higher high in here and break this cycle, what's going on. And it's a similar type thing on silver, SLV. Let's just take a look at it. Now, the pattern that we've got here for wave two, let's just show you what happened. Down 2 cents on SLV on Friday, but up 69 cents percentage-wise. Big move here, especially for the 2 weeks in a row. Big move here on SLV. Now, I've got this into a downtrend also because that's exactly what it's doing. And actually, silver is leading gold to the downside. Silver broke down in here, and then gold finally broke down following it. Now, here's what I've got as a corrective pattern for wave two. I don't really like it, but I don't see anything else at this point. So we'll see what happens in here right now. I'm looking at a 50% retracement, 2 versus 1. I like we got a nice little 5-wave move down here, and then we've been doing nothing but overlapping sideways. Overlapping waves to me are corrective waves. So when you look at this, here's why I said I don't like a WXYXZ, because I usually look at something that complex as being in a fourth wave, not in a second wave. But I don't see an alternative at the moment. There may very well be. But in terms of the resistance level, you know, you got to sit back and say, okay, 2065 on SLV, and you know, that's very close to a 50% retracement, which is 2082. So that's the picture. I mean, if this continues to rally like gold, then maybe all of a sudden they are really coming alive and telling us that there is indeed more structural long-term inflation going on. I think we're going to find out here over the next few weeks. Okay, that's it for this video. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone, have a great week. We'll talk to you on the next video.